You pay taxes every year on dividends that are paid. Okay, simple as that. You pay taxes on dividends that are paid. Dividends and capital gains have a preferential tax rate right now. You could be in the 60% tax bracket, but the most you'll pay on dividends and capital gains is 20%. Okay, so you got that going for you. Okay, and if you did sell, you know it will be taxed no more than 20%. It depends on your tax rate, what your tax bracket is at that moment in time. You know, I don't like paying taxes, but I don't mind paying taxes on gains that I have and profits that I have. If you got to pay a gain, it's a tax. It's better to do that than pay taxes on ordinary income, which is very, very high. So you know that's the way you do it. Now, my own personal attitude is that I'm going to let my grandkids worry about the taxes on my account. And you know what? They don't have anything to worry about. Okay, my beneficiaries. Because it is my intent never to sell a stock that I own. Somewhere along the line, maybe use the income from the investments, but I will never sell any of the stocks that I own. I'll hold on to those, and they will then go to my beneficiary when I die. And my beneficiaries will when they get that gift on death, will get a bigger gift than anything else I would have planned, because when I die and they inherit it, their cost basis becomes the value of the asset on the day that I die. So if they turned around and sold everything the next day, I'd haunt them. Okay. But they wouldn't have to pay 1 red cent in taxes on all those gains that over that 20, 30, or 40 years you'd seen building up in your investments. So there's some really, really big benefits. Trust me, our friends back in Washington, D.C. hate that step up in value rule. And every year there is a threat to repeal it. And so I try to let people know when that's happening. So just be aware that it's out there, and it very well at some point in time could be removed. I don't know if they would if there was a way that they could grandfather the protection in or something. I really don't know. But every year they take a swipe at it, just like they take a swipe every year at the mortgage interest deduction. They hate that. They hate that. And there's a very active campaign in California right now to do away with Prop 13. So anything that's good for us is not good for them. And so you better be aware of that and be vigilant about that and pay close attention.